Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be discussing everything Bitcoin from the Fed, FOMC, and the speech, everything that happened yesterday, what we saw with BTC in terms of that price action to the upside. We spoke about it on the stream this morning. I'm going to try to summarize this in a nice, concise video this afternoon so you know exactly what to be looking out for. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, why not go ahead and subscribe and stay up to date with everything that we do here at Cheeky Crypto. Okay, let's just get right on into it because we've got a lot to discuss. We haven't got time for idle chit chat. Let's get right down into the desktop here. The Fed announced a 0.25% raise to rates, and you know they call it an inflation cooling, but there's really a lot of these narratives and these media outlets. They're kind of skirting around the actual feel of the room. So I listened to the speech and. Essentially, there's going to be a lot more hikes, okay? There's no pivot in sight, and basically they are testing the water here with a slightly decreased rate. I was personally expecting 0.5, and I'll get into more about that in a second, but essentially they went with 0.25, which I find incredibly disappointing, but I think that's going to change. They're going to continue increasing rates, which means we should expect more volatility in the markets. They are not easing off. There is no pivot in sight. Essentially, we should get brace down because there is, although inflation has kind of come down in a couple of key areas, for the most part, there are markets in the US that haven't even seen a dent in their inflation yet, the housing market as an example. So we should experience, I think, a lot more longevity to the bearish side of the market. Now, with everything that was happening yesterday in terms of that 0.25 and the speech that was occurring yesterday evening, at least UK and UTC time, we did see some interesting stuff occur within the DXY. Okay, so the DXY absolutely tanked. It came to the downside. Now, we might think, well, why do this? What's going on? What is sitting behind that data? And that tells us that the DXY was going down, and it's really, all you have to do is really reflect on what's going on with the pound to US dollar, or the euro to US dollar, or the JPY to the US dollar, right? The Japanese yen, the euro, or the sterling. And what did we see? Well, we saw basically traders ditching USD in volume, okay, and they were looking for any other currency, okay? So we're talking about, you know, not Bitcoin cryptocurrency here. We're talking about actual Forex traders not liking the rate hike, not liking the hawkishness of Jerome, and basically what they've done is they came out of USD and they went into other currencies. And as a result of that, what you saw was you saw the DXY come down, okay? So it's all about supply and demand. I talk about this all the time. And what we saw was a lot more supply of USD suddenly come into the markets, right? And that basically tanked the dollar value, or the index, or the dollar currency index, the DXY tanked down. And what happens when a DXY tanks down? Well, we start to see Bitcoin's price move up because there's an intrinsic value here, an underlying value of any asset, right? It's not valued on dollars, it's not valued on sterling, it's not valued in euros or Japanese yen. It's an instinctive value to it, right? And the fluctuations of those currencies have an impact on the price action of these other assets. In the case here, what we saw was a lot of traders ditching USD in favor of other currencies. That what we actually happened to, or what happened here with Bitcoin, was that you now need more dollars to buy the Bitcoin because the dollar value had decreased, right? The value of the dollar goes down, you need more dollars to buy your asset. Okay, so when we start actually putting all this into balance, we can see that DXY was driven down from Forex traders ditching USD, and so basically you need more dollars now to buy your Bitcoin. Okay, what we don't want to do is we don't want to fall into the trap of thinking that Bitcoin's price action here went up because it had a lot of volume behind it. If we actually throw the volume in here, what do you actually see? You can see that there was just a spike here momentarily, and then volume drops all the way down. Okay, there's no volume behind any of these movements. This is also very clear when we start talking about, or actually move up into the larger timeframes of BTC, and we will talk about that in a moment. In fact, actually probably just come over into our daily chart just briefly, and I'll just I'll actually bring it up on this one. It'll make it a little bit easier. If I come to my daily chart here and I throw in the volume profiles on this, what do we see? Well, we can see that the volume profiles, there's no volume up here in this higher range. It's very, very limited. Up here in the 25K, very limited a range when it comes to volume profile. And then, of course, you can see where is the most of the volumes actually sat, where the most of the people are kind of, you know, have their liquidity sat where buying and selling occurs is down at 19,200 at the moment. So when we take a look at it from this kind of point of view and this perspective, what do we actually see? Well, we don't see a reason or a need to think that there's terribly too much transacting up in these higher ranges. It's actually quite small in comparison to some of these lower areas here, where it seems to be a lot more liquidity currently sat in those. So when we kind of think about, everything that's been going on, if I turn that off and come back into our hourly chart here, when we talk about this move to the upside, we know it's low volume based on there. And really what's been driving it is the fact that the dollar value has come down. Meaning you need more dollars to buy your cryptocurrency asset. Obviously, there is then pockets of FOMO that gets created from this. People who don't understand how these kind of markets are being manipulated and controlled at the moment. What do we see? We see greed coming back into the market. A lot of people thinking we're in a new bull market, we're moving up quite nicely, and actually there's no volume backed behind it. And this is something that we talk about as well in terms of our Bitcoin data from our on-chain metrics. So up here, for example, what we can do is we can see that the inflows and the outflows for all of 2023, that's the 1st of January through to the 1st of February, it only has 8,000 Bitcoin difference. This basically tells us that there isn't actually a lot of buying and selling occurring here. There's actually a lot of buying and selling occurring, but it's not actually resulting in an accumulation of BTC. Instead, you see people selling and people buying, and they're being pretty much equally balanced out. This becomes very obvious when we start taking a look at the inflows and the outflows on our line graph. You can see that yesterday we actually had a lot more Bitcoin going onto the exchanges than coming off, even though that price pushed up really well. We can also take a look at the wallet counts, so we can see that retail money has been flowing in, and we have smart money coming out. So we can see here that basically the people who were selling are the larger players, whereas only the smaller money has been kind of coming into the space and buying up that Bitcoin. So we should be, very aware that everything that happened yesterday in terms of the Fed announced the 0.25 actually just created uncertainty for USD, which basically brought the DXY down, which has a result of bringing cryptocurrency up. Eventually, though, this is going to flip and turn, and we'll probably start seeing, people start to come back into USD, which will lift up the DXY, which will then tank Bitcoin. Because there isn't a lot of volume behind Bitcoin, we should be pretty nervous and concerned that this is kind of just artificially being inflated, which is why we tend to find that the smart money is coming out of their positions with dumb money coming in. Okay, so we should be aware of that. Now, 0.25 was disappointing from the Fed. It is not what I was kind of expecting. I would have thought that now is actually the time to be more aggressive on it. And what we saw with the Bank of England today was a 0.5% increase. So they go from 3.5 to 4% interest rates now. So again, very aggressive still in terms of trying to curb the inflation. This is kind of what I was expecting to occur when it came to the Fed, but I was very disappointed that they only did a 0.25. That, to me, just seems that they're wanting to drag this out and keeping these markets artificially buoyant just a fraction longer. And I would question why that is. At the end of the day, smart money here, they are going to be rubbing shoulders with a lot of politicians. So I would estimate that there's a reason that these guys are coming out of their positions and they're in the know of something. What I would also say is that the wallets for the over 1,000 BTC or more has come down even lower than it was in the June lows. If I actually bring up my 365-day view here, you can see that the bottom of November was down here and they were selling. Okay, you can see how the black line, which is the number of wallets that have over 1,000 Bitcoin, continues to decrease even after the FTX lows at 15K. Okay, they come down to here, they go sideways, and now they're coming down even lower. Okay, so the question here becomes, if you believe that the bull market is in play and that we're going to the moon, then we also have to equally believe, or at least you guys have to believe, because I don't believe we're in a bull market, you guys have to believe this. You would have to believe that if the bottom is in, that the smart money has made a catastrophic mistake. Whereas that is possible, it's incredibly unlikely. The smart money is unfortunately such a huge volume of fiat funds that they can move the market in a direction that they want the market to go in. So to kind of think that essentially these guys are making the mistake, I think is incredibly naive. And whereas a new lower low isn't a guarantee, I think it's highly probable. And we don't want to kind of get ourselves kind of tricked out thinking that all of a sudden, we're in a bullish environment, we're going to the moon, when that might not actually be the case. Caution is going to pay dividends here, in my opinion. So let's go ahead and move on down into the charts, right? So knowing that what we've seen is a lot of traders dumping their USD, or at least we did. They've actually started to kind of come back in a little bit. Okay, profits are being taken on various different markets and currency pairs. The DXY is bouncing around a little bit. Where are we? Well, we did enter into the slightly higher range here, and we got smacked down pretty hard. Again, this is going to be the higher area where there's a lot of selling pressure occurring. We can kind of see that within the wallet counts. We've seen the smart money coming out of their positions as FOMO really hits hard with some of the retail money. And as we kind of see here, my expectations are that we continue to move down, but expect a lot of volatility. I don't think we've done pushing up higher, but we are progressing quite nicely towards getting it done. Okay, so I do think we have that upper area. We can still grab some of the liquidity that sits higher in the price charts, and we can still come on down. One of the things that we need to be really cautious on here is that we haven't got a good structure. There is no trend-based structure according to Elliott wave theory here. We are, of course, above the 200 daily EMA, which is good, so we can see that on here. Okay, we can see that we're above the 200 daily EMA, so that's a positive, but we are fighting the 200 weekly EMA on our on the weekly chart, obviously. So here we can see that we're really fighting and struggling a little bit. Whereas we can push up higher, my expectations are that we are not going to be staying above the 200 weekly EMA for terribly too long. We are overbought, of course, on the stochastic RSI. If I show in the volume profiles, we can see that the volume profiles ever since FTX has been on the decrease. Even if we were to omit the FTX saga and just take a look at this pump to the upside, the volumes are decreasing week on week as the price goes up. So again, we're running out of momentum. That's very obvious here on the weekly chart. From our RSI, it is high, but it's not overbought. This isn't overly problematic. RSIs are only great if you're in a trend, and since we're not in a trend, this isn't going to give us a huge indication as to what is going on, but it does help us understand where we currently sit. Now, if I come over to our daily chart and bring in our volume profiles, again, you can see just up here how the volumes are dropping as we start to push on up. This is an indication that it is an artificial move and it isn't really backed by volume. The very definition of a bull market versus bear market, a bull market is basically defined when the volume outpaces that of the supply, and a bear market is when the supply outpaces the demand, which brings me back to the total amount of inflows for 2023 versus the total number of outflows for 2023, and it equals only a difference of 8,000 Bitcoin leaving the exchanges. That is not an accumulative number. That is not a number that is signaling that a huge number of whale investors are buying up BTC. It tells us, though, that actually this is an artificial move to the upside and could potentially well be the end of many retailers who have FOMO'd in. So caution is kind of the message here. Now, it's worth noting I'm not a financial advisor. I cannot give you financial advice. All I can do is give you my thoughts and opinions. And on the RSI, on that note, it is up in the overbought area. And so again, we are going to be a little bit cautious here as we are up in oversold. Again, not in a trend, so it's not a huge indication. We can obviously linger in these areas for quite a bit. But it is the opposite of that of the stochastic, which is showing us in an oversold area. Considering volume is decreasing, we'll be back up in the overbought area without doing terribly too much in price movement. So we want to be a little bit aware about how fast this stochastic RSI does actually move. And so overall, when it comes to kind of these kind of price movements, I do think we're coming towards the end of a move. I do think that we have here a potential ending diagonal, as I've spoken before, 335 corrective structure, which is a regular flat correction. And then we can move on down back into the lows. Now, I'm not saying that we have to have new low lows, but I do think they're highly probable considering that the whale investors and the multimillionaires, the billionaires, have not really been steadily purchasing. Now, as I come up into the Wyckoff pattern, it still technically is in play. No, there is no spring event that has occurred. If anyone has drawn a Wyckoff accumulation pattern on the daily chart and can show me where the spring event is, then sure, share it in our Discord server. I'll take a look at it. But everything in here that, as far as I can see, you do not meet the schematic requirements for a spring event to have occurred. That puts us firmly in phase B, right up here, just above the automatic rally, which is our white line at 21,888. And so we're looking to come on down. I'm not saying that we have to have a spring event. There's two accumulation patterns, but we do have to come down towards the 18,000 and both of these to be in play. Again, I don't care. I have no preference as to whether or not any of these actually do play out. This is something that the community were talking about, so I thought I would help by drawing it out on the charts. I have no preference as to whether this plays out or not. it's just what it is. So now this is the only place I can even get this to remotely fit. No spring event has occurred, not as far as I can see. Nothing that meets these requirements other than the fact that where we are right now, putting us in the just above the automatic rally of phase B, meaning that we've got to come down and retest the secondary test of phase A, which puts us at about 18,600, even to know whether or not we are going to have a spring event or not, because you don't have to. We don't have to go down into new lower lows following the Wyckoff patterns, okay? But we do, if we were to follow a WXYXZ on Elliott Wave theory, have to go down towards 13K. That's still in play. So hopefully that puts to bed a lot of that kind of noise and nonsense in the space. Lots of FOMO, hype, and emotions are flying wild. Let's kind of curb the emotions. Let's look at things logically. What's actually causing movements? Is there actually any data in the background that supports a bullish movement to the upside? Or is all of this actually just being artificially floated a little bit higher to keep some of the exchanges buoyant a fraction longer? Let me know your thoughts in the comments down below. I will, of course, leave this video right there. If you found it useful, smash the like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one, though, guys, have a fantastic day.